Hello, sir. Can we start with the call?
Yes, Anandji. Yeah, please start.
Yeah, thank you. Welcome everyone to Indian Bank Results Con Call for fourth quarter FY24, hosted by MK Global. From Indian Bank Management, we have MD and CEO Shri Shantilal Jain ji, and Executive Director Shri Mahesh Kumar Bajaj, Shri Ashutosh Chaudhary, Shri Bajrang Singh, Shri Brajesh Kumar Singh. We would request the MD sir to brief us with the key highlights of the results and strategic direction, particularly in terms of growth margins and asset quality. Post that, we will take up the Q&A from the participants. Over to you, sir.
So, good evening. Warm welcome to all the analysts and investors in the post-result conference call of Indian Bank. Today we declared our Q4 and FY24 results. So I will just touch about the brief on the financial performance. Our business has grown by 12%, and of business deposits have grown by 11%, and credit has grown by 13%. In the deposit, 11%, our CASA has grown by 8%, of which saving deposit has grown by 7%, and bank could maintain the CASA ratio above 42, domestic CASA ratio above 42. As far as credit is concerned, we have grown by 13%. Under the credit, the RAM credit has grown by 14%. And as a result, our RAM advance to total advance have improved from 61% to 62%, near 62%. Under the RAM, the retail credit has grown by 15%. And under the retail, the housing loan growth is 11%. And our auto loan growth is around 49%. Personal loan growth is at 10%. In agriculture, we have grown by 19%. And in that, this 19% growth is basically a crop loan growth is at 19%. In a crop loan, we are having around 78% of the crop loan as a gold loan, which is growing around 27%. So other than the gold loan, balances are coming down. Investment credit has grown by 10%, agri-allied by 62%. Here measure is SHG, which is growing around 37%. MSME has grown by 6%, but if you see the standard MSME, it has grown by around 10%. Corporate credit has grown by 10%. So you see, in quarter-on-quarter basis, you see we are growing in equal proportions in all sectors, whether retail, agri, MSME, and maintaining our RAM to total credit around 61 to 62%. This is the business side. As far as our profitability side is concerned, you see our financial year 24 results as well as quarter. So our net profit for the FY24 has grown by 53%, and you see PBT, profit before tax, has grown by 85%. And this growth is basically growth in NII, which has grown by 15%, and non-interest income too has grown by 10%. Under the non-interest income, basically trading profit has grown by 127%. Fee-based income has grown by 11%. PSLC commission has grown by 37%, and miscellaneous income has also grown by 27%. So NII growth and a non-interest growth is the main reason for our growth. In the expenditure side, what we have done, there is an increase in expenditures, mainly under the head salary, which has increased by 23%. What we have done here, because of the base revision provision, there is an incremental provision on retirement benefits, as also we have provided for ex gratia pension for entire 4 or 5 years in the current quarters, and therefore there is a slightly increase. All other overheads are slight increase in overhead is because of our expenditure on digitizations. So this year as a whole, that has grown by 53% in net profit. If you see the quarter on quarter also, our net profit has grown by 55%. You see in a quarter on quarter, up to December also we have grown by 50 to 53%. So the 50 to 53% growth is happening quarter on quarter basis in the bank. So NII in the quarter has grown by again 9%, and non-interest income has grown by 13%. Here also the non-interest income growth is basically trading profit, fee income, forex income, and PSLC commission. So you see all our income streams are giving us a good profitability. And you see that here PBT has grown by 111%. You see last year we were carrying forward the losses of Astral Allahabad Bank. Now this current year entire amount is taxable, so the tax rate is coming around 26% or so on a quarter-on-quarter basis, on a year-on-year basis. So this is about our profitability. Now you see our gross and net NPA. Gross and net NPA has come down. You see, we started our journey on amalgamation from 1st April 20, when the gross NPA was 11.39%. The first year 9.85, second year 8.47, third year 5.95, and fourth year we are at 3.95. So in the whole year, our gross NPA has come down by 2%. Likewise, and you see on a quarter-on-quarter basis, our gross NPAs are coming around 50 bips plus minus. So as a result, in the whole year, it is around 2%. Likewise, our net NPA is also coming down. We started our journey from 4.19. Today we are at 0.43%. Our provision coverage ratio has improved to 96%. That is about our asset quality. And one more thing is that you see our SMA number. SMA number has come down significantly. It is now around 0.48%. And the slippage is 1,200 crore. Hardly, there was no slippage in the corporate book. Rather, we have recovered in the corporate book. And the slippage is 1,200 is coming mainly from the MSME, 600 crore of around 140 odd crores is from the restructuring, and around 500 crore is from the agri, that includes your KCC and the other agri and SHG, and around 100 crore is in retail, mainly because of housing and education. So asset quality is under control. Now coming to the capital side. Our capital adequacy is 16.44%. You see, from year on year, it was 6.49 to 6.44. Around a 60 bips reduction is in tier 2 because there we have paid the subordinated bond because we are having good capital adequacy ratio. If you see our tier 1 and CET, there is a growth. Of course, we have raised the capital by 4,000 crore, having impact of 100 bips, but there is an impact of 57 bips because of the RBI guidelines. So considering this, our increase in capital adequacy is more than this over 31st March 23, and this shows that our generations are adequate to take care of our 12 or 13% credit growth, where we can protect our capital adequacy and grow. And because of the QIP, our shareholding has come down from 79% to close to 74%. So that recovery, we told that we will be having a recovery of 8,000 crore in the whole year. As against 8,000 crore, we have recovered 8,800 crore. So 800 crore more. And our story of recovery more than the slippage is continuing. This year also, slippage was 6,700 crore, recovery was 8,800 crore. Last year also, the recovery was 8,500 crore and slippage was around 7,000 crore. So you also see on a quarter-on-quarter basis, our recovery is more than our slippage. We have recovered around 2,858 crore from the AUC book. What happens? Whereas in the P&L, it is coming less amount than this amount, because what happens when you sell to NARCL or other, you get a 15% case and 85% in the shape of SR and all. So as per the guidelines, this provision which we are having on SR, we are not reversing, and as and when the money is collected for SM, this SR we will credit in the P&L account. So this will be a profit for our future. Now, slightly more provision we have made for standard asset because of on the basis on the portfolios. As far as NARCL is concerned, so we have transferred around 6 account having book balance of 3,000 crore, 4 bids are under process, and 4 on the 4 account we have received the bid, and in a 5 account it is under process. Now, as far as COVID restructuring is concerned, it is now outstanding, which we started from 18,000 crore is today 8,000 crore, which is 1.68% of the book, which was around a 4.5% book, and we are having around a 27% provision there against. In FI side also, our market share is increasing both in PMJDY, JJBY, SBY, APY in all. And we are doing number of things under digitizations. So I request my colleague Bajaj to briefly discuss about the digital journeys, and then we will open for Q&A.
Thank you, sir. Good evening, dear analysts and investors. As far as Indian Bank is concerned, digital transformation journey continues. Our transaction on the digital channels now are 89% as on Q4 for financial year 24, as against 85% in the corresponding quarter financial year 23. 4% improvement. And we have totally launched 78 digital journeys, out of which 34 digital lending journeys and 19 other digital process portals were launched during the financial year 2024. Our total digital business increased more than 14 times from 5,640 crore to 81,250 crore during the financial year 24. And we are planning during this financial year 27 digital journeys. Out of that 10 digital journeys we are planning in the Q1 of 24-25. Bank has been coming out with various digital initiatives and enablers like eOTS, digital lending platform, tab banking, eBG, e-locker, middleware, APIs, branch server centralization, death claim portal, settlement portal, document and record management system. Apart from that, we have created fintech partnership, government and fintech partnership for the purpose of the CASA. We are providing various solutions to our government departments as well as the institution, like SNS solution, API banking, mobile app for apartments and societies, DBT platform, solution to municipal corporation, solution for religious institution, cess collection portal, e-governance solution, dynamic UPI QR code, web-based GPF solution. Apart from that, bank is having various key projects which are under implementation, like omni-channel app, which are going to come shortly on the retail as well as MSC and corporate bank, the customers on the internet banking as well as mobile banking, CMS and cloud migration on the private cloud as well as the hybrid, data analytic models, CRM solution, CBDC we have already started. The Gen AI, some of the use cases we have already started up with tie-up with RBIH as well as our own team. Next gen call center and 4-way data center also banking starting, because we will have a DC, near DC, DR, near DR for a zero loss data. Bank is committed in adding various digital journeys, products and processes and portal for ease of doing business and better customer experience. Thank you very much.
And one point I forgot to tell you about the margin. But so at the beginning of the year, we said that our margin will be 3.41% plus minus 10 to 15 bips. Is against 3.41 domestic margin is 3.54 in the year as a whole. And you see in the last quarter, it was 3.52, improved from 3.49. So this is because of 2 or 3 reasons. There's an increase in the yield loan advances as well as the yield loan investment. Now we are open for question answers.
Thank you for the highlights. So before we open up the floor for Q&A, I had one question, which is like pertaining to the recent RBI guidelines, particularly where basically RBI has said that banks need to provide 5% as a standard asset provision on the project finance exposures. So first, like how much is our project finance exposure, and what is your view on these guidelines?
No, these are basically the draft guideline. First point, and the draft guideline, they are asking comments, and we will also be sending our comments. And in the guideline, what they have done is one is a construction phase and an operations phase. In a construction phase, the provisioning requirement is high, and when the DCCO is achieved, will come down, and when the 20% payment will come, it will come down further. this is the crux of the guideline, and when the DCCO is increased, and if there is a default, then 7 June circular will be applicable. This is the crux of the guideline. The point is that impact on Indian bank. First, I'll like to tell you that over 60 to 63% is a RAM. We are not a corporate bank. Remaining 37% is our corporate book, right? And even you see, if you grow 10%, 11%, so 1 lakh 80,000, 18,000, 20,000 crores of a corporate book. So all are not in projects. All are not in projects. So very small amount will be from our perspective will be under the project, under construction, very small amount, and the completion and 20%, of course, we will have 1% at the end of the day is against 0.4% of the existing guideline. So of course this we will further examine here also, and even we'll discuss in the IBA as well what is the impact on that. So it is too early to say about the impact and everything, but not a big impact because we are not a corporate bank.
Sir, but I mean, can you just repeat basically what is the overall project finance exposure that we have on the book?
That I'll tell you, right?
Okay. And sir, basically
during the discussion I will tell you.
Sure. And sir, do you believe that this 5% standard asset provisioning is too high a provision to ask for? Just based on, at the construction phase, this could actually derail the entire project financing cycle and, the CapEx funding cycle that we are talking about.
So that this is a draft guidelines. No? We will submit our comments. Right? And you see, for a construction project, you also give this loan over a period of 2 or 3 years. Suppose it is a road project, it takes 2 or 3 years. So slightly you disburse. You don't disburse entire amount on a first day. So we'll discuss, sir.
Sure, sir, we'll discuss. Now I will open up the floor for Q&A. Any participant, if you have a question, you can use the raise hand option and ask a question. First question we have from Mr. Ashok Ajmera. Mr. Ajmera, please unmute yourself.
Thank you for giving me the opportunity first. Good evening, sir, Jan Saab and the entire team. And congratulations for another good quarter and a year of the fantastic results by Indian Bank, where on all the parameters the bank has improved its performance. Having said that, sir, I will take this point from Anand's point only, little bit to have little more clarity on this RBI circular, that your exposure to ports and road is 8,696 crore, other infra is 30,552 crores, and CRE is 17,989 crores. So altogether it is around, I think, 60-65 crore rupees of total exposure on this. So roughly how much is basically under implementation, which will come under the higher provision as per this circular? Because this will be on existing as well as on incremental.
Sir, entire exposure is not on project under implementation, right? We are having exposure in the shape of working capital also, right? We are on an ongoing basis also we are giving loans to them, right? So entire is not a project under implementation. This circular is basically project under implementation, right? So basically even in the road projects also we are in the business from so many years. So 20% money has already been come. Then where is the question of this additional provisioning? So in case of a new project, which is we might have given in last 2 or 3 years, that will have a major impact. Otherwise, the projects are already completed, sir. And you see, projects are already completed and there is hardly any SMA. So projects are running that way good.
Okay, sir. I mean, as the time
we'll examine in detail.
Yes.
We'll examine in detail and then we'll come out with the numbers.
Yes, sir. Point
Because
well taken.
it is very,
Sir,
each and every project has to be assessed.
Yes, sir. Sir, I have just information, point of information. In note number 10, it says that you have formed a new subsidiary, Bank Global Support Services, which is on 9th of February 2024. So, sir, what is the idea behind forming this subsidiary? How much capital the bank has invested? And what benefit the bank is expecting to draw from this subsidiary?
So we have started this operational subsidiary with a capital of 10 crore rupees. What this subsidiary will do, they will all back office operations for us. The way that you see that the way the SBI has formed, the way the Bank of Baroda has formed the BGSS, this company also will be doing a number of activities for us, for suppose the collections, then the operations part, even check issuance, or even you can say as a checker, not as a maker, not as a checker, they will do number of activities where we will save a huge cost and increase our TAT. So this company has started even the working from the 1st of the March. So first we have put them on a collection and also for giving us a lead for saving and current account opening and all.
The existing staff only has gone to the subsidiary of the bank, or it has hired fresh people?
We have recruited the people from the market, and the subsidiary is recruiting the people from the market, not from our bank.
I think that must be the main idea, to recruit the talent from outside and get the work done. Sir, my second point is, sir, on the advances credit growth. Now, okay, we have been going in 12-13% range. But at this level now, when the things are so much things are happening in the country, and even some of the bigger banks are also coming in the range of 14-15%, 16%. Some smaller banks are still at 18-20%. Number one is that why can't we, can we not think of revising this targets for the future at least to 14-15%, the way the things are happening? And secondly, on SME front, we are on record as 6% only growth. You are saying that if you take it on standard asset, then it is 10%. But still, are we not comfortable with the way the SMEs workings are there, or the credits going to the SMEs, that we cannot think of increasing our loan book to the SMEs, sir?
Okay, sir. You see our credit growth is 13%. You see our gross NPA has come down from 5.95 to 3.95. So if with our standard credit growth is 15%, which is nearly in line with the industry, 15%, 16% or so. Like the same story in MS, but we are very cautious in MSME because you see our more NPAs are in MSME, corporate hardly any NPA with us. So slowly we are growing also. We are growing digitally also, because we have started 2-3 things. Based on the cash flow, we are started giving loan. The pre-approved business loan we started. Based on the GST return we started. Based on the cluster-based financing we started. So security-based lending we started. So we are going in a very secured way there. Otherwise, our credit growth is 13% to 15%, sir.
All right, sir. Sir, if you look at the external rating slide, 11 of 48, BB and below, in the corporate book, there is more than 100 crore corporate book. There is an outstanding of 11,275 crore. These are rated BB or below. And at the same time, a slight increase is also there from 9,008 crore to 11,275 crore at the end of 24 as compared to 23. So what kind of these corporates which are rated below BB and not the government or state government, and still more than 100 crore? How many such corporates are there, and what is the asset quality of this corporates against this credit, sir?
Good. Basically, what happens under this bracket, basically 3-4 type of exposures are there. One is basically LRD exposures, where we are not getting rating, but the cash flow is being protected. First point. So because you see our LRD exposure has increased, you see just prior to that 13,000 becomes 17,000, right? So 4,000, just you see slide number 10 and then you compare with slide number 11. So the one is a LRD exposure. Second kind of exposure here is basically in the hospital or educational institutions and all, where we are having the cash flow. So these are 2 or 3 major area where we are increasing our exposure, where the cash flow is protected, sir.
Good, sir. My last questions are on the investment in this round of discussion on the investment book. Our AFS book, we were told, we had increased the duration, modified duration from 1.98 to 2.77.5, and we were of the view that, the bank was of the view that with the interest rates little bit softening up, we'll make little more profit on AFS. And still the modified duration is 2.72 of the AFS book. So what are the views of our treasury going forward on what do you see like in the coming quarters? How do we make the profit from this book, sir?
Okay. So I'm telling you, we have done a number of things in a treasury side, sir. First is our investment has grown by 14%. So 1,88,000 to 2,14,000 or 26,000 crore of growth, right? This is the first point. So because we were knowing that the interest rate will come down, so we have made a huge investment at a good rate, even much higher than the current rate, much higher. And you see holding yield, you see our investment yield has increased. In fact, today my holding yield for AFS book is 7.28 and the HTM book is 7.06. Virtually my yield on total investment portfolio is 7.17. 7.17. You see, my last year my yield on investment was 6.80 and today it is 7.17. So you see 37 bips higher on a 2 lakh crore book. What kind of interest, more interest we will have in the next few years to come, and we have increased our duration. So first is that it will give us a better interest income in the time to come, and we also know that the interest rate will.
Sorry to interrupt you, sir, but this yield on investment in one of the slide, I think, is quarter on quarter is 6.88%, and
right,
year
6.80%.
So
6.88 is a quarter number, sir. 6.88 is a quarter number. We have done a churning in the last quarter as well. And as a result, what happens as per the new guideline, we move to the new guidelines, right? Okay. So the new guidelines are different than the earlier guidelines because now you cannot have a yearly churning, which we used to do in the old guidelines, right? Yes, so what we have done, the 6.80, in fact, holding yield is 7.17, sir. So this is because of churning. And this will give a better interest income to us in the time to come. Besides this, if the market is favorable, which we think that after third quarter, after second quarter, third and fourth quarter, we'll have good opportunities. So this will give us a income as well, treasury profit on the interest income both. So that way we have built this book, sir.
Okay, sir. Thank you very much, sir, and all the very best. And I will come back again if time permits, sir. Thank you.
Thank you, sir. You are clear, sir. What is our thinking in that?
Next question will move on to Mona. Mona, please unmute yourself.
Yeah, hi, good evening, sir. My first question is on the recovery from written off book. So this year, if I look at the full year, you've recovered about 1900 crore. If I have to understand the mix of various recovery channels, OTS, NCLT, etc., could you give some sense?
Okay, just I want to tell you 2-3 things in recovery basically. So one is a slide number 16, right? That talks about the P&L.
Right.
And slide number 29, which talks about the movement of NPA. Right? So in slide number 29, you see the AUC recovery is 2,858 crore. So around 2,858. I have booked up 1,800 crore in P&L. So close to 1,000 crore is a amount which is a SR or OCD. We will book an income as and when it will come. So this is a income for the next few years. But now, second point is the recovery. From where we are having recovery. So recovery, basically we are having recovery from NCLT. You see the NCLT recovery in 23-24 is 1,817 crore. Is against the last year recovery of 1,029 crore. So the 800 crore more recovery from the NCLT in 23-24 is against 22-23. Okay. The compromise recovery is 1,505 crores. The sale to ARC is 464 crore. Sale through surface is 861 crore. And other cash recovery is 3,072 crore and upgradation is 8,078 crore. All put together is 8,798 crore.
Got
So
it.
here you see every quarter we are recovering more than 2,000 crore.
Okay. Okay. Got it. Secondly, if I have to look at the employee expense, so does this also include the impact of pension provisions this quarter, and how much would that be?
No, what happens this quarter our total staff expenses is 2,633 crore, right?
Right.
Of this 1,015 crore is employee benefits. Out of this 1,015 crore, 388 crores, this is one item, which is basically a provision we have made for ex gratia payments to be made to the pensioner for next 4 or 5 years.
Okay. So, got it. So, if I have to understand the employee expense run rate going forward, what would that be, next year from a quarterly perspective?
What we think that this, you see, the expenditures salary is 6,400 and employee benefit is 2,800. So put together is 9,200 crore is our expenditure for the year 23-24, right?
Yeah.
So considering the current salary bill and the AS15, this amount can be close to 9,000 crores.
Okay. From a full year perspective.
Full year perspective.
Okay. 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 And also finally on the outstanding standard provisions, how much would that be for us?
Outstanding standard asset provision we are having close to 7,900 some odd crore.
Okay. And this includes restructured provisions as well?
This includes all provisions.
Okay. Okay. And just finally, what would be the guidance on margins now?
So you see what we have told you that 3.41% with margin, we have ended with a 3.54.
Right.
Now we are seeing that we are in a very tight liquidity market, right? In a tight liquidity market, naturally the interest rates are slightly higher. And even the CASA growth in line with the total deposit growth may not be there. Though our endeavor will be to maintain our CASA more than 40%. So, and some lag effect of the deposit will also be there going forward. So in the current situation, as against 3.54, our margin can be in the range of 3.4 to 3.5, 3.4%, 40 to 3.50, with the of course the 10-15 bips here and there.
Okay. So it may come down by 5 to 10 bits.
But you see, last time also we have given a guidance of 3.41 and we ended with 3.54.
Correct. Got it, sir. Thank you so much. I'll come back in the queue.
Yeah, thank you, Mona. Next question we'll take from Nishant Shah. Nishant, please unmute yourself.
Hello. Hi, sir. Congratulations on the good results. It's really remarkable. So just coming back to this RBI project project circular. So you mentioned in your opening remarks that it's probably a little too early for you to kind of give any comments. But just even if you can qualitatively answer, thought process wise, the spread on some of these project loans will be 2%, 3%. So mathematically, how does it work out if you have to kind of provide 5% upfront in year 1, 2, 3? It's like you almost operate at a negative ROA for first 2, 3 years. So is the current kind of format of this circular probably going to see light of day? Or if you can just kind of give your thoughts around how this changes, if at all it changes.
First, we have to further examine this circular. But the plain reading, the 5% margin we are not having. This is the correct, because no bank is having a margin of 5%. But what the circular says that you have to build in 2% and then 3.5% and then a 5%. By the time what will happen, some of the projects under construction DCCO will achieve and will convert into operational, and the requirement of them will come. So this is an ongoing process where, and after that, some 20% will come, some provision will release, some provision will come. This is a cycle, it will happen. So slowly, maybe after, and therefore they have given a time also up to 27 to build up this provisions.
Mm-hmm.
But if you
so that's on the back book.
If you read straight 5%, it appears to be high side. It appears to be high side, but they've given a timeline. And then this is only a draft, sir. We will submit our views also.
Correct, sir. So I understand about the back book. Okay, you will get time to kind of like build up provisions on the existing loans, but like on a go forward basis, incrementally, say tomorrow, some large corporate comes to you for like setting up a port project or whatever else. Like, how do you? Is there enough pricing power to go and tell an NTPC or an Adani or someone like that to say, hey, like I'm going to charge you 5% more because I have to provide 5% more upfront? Like, because incrementally, so you don't get that leeway, right, of spreading that provision over 3 years.
It is very difficult to get 5%. In the competitive environment, it is very difficult to get 5%. But some margin we can always load. The way the RBI circular came for NBFCs and all. So some increase we have made in our NBFC pricing. And this will be a new normal, na?
Correct, sir. Okay, fair enough. And even if you have a ballpark number sometime during the call, if you can share about like, what would be roughly the projects which are currently under implementation, that will be really helpful, sir.
Okay.
Yeah, thank you. That's it from me. Thank you so much, sir.
Yeah, thank you, Thank you, Nishant. Next question will take from Ketan Athavale. Ketan, please unmute yourself.
Hello, sir. Thank you for the opportunity. I just wanted to know your credit cost outlook for FY25 and FY26.
So the credit cost, you see, has come down substantially. Our credit cost is basically 0.7% or so, right? Now the net NPA itself has come down to 0.43, so it will come down further, sir. You see, credit cost is continuously coming down. And we are hardly any SMA 1 and 2.
Ketan, are you done?
Am I clear, sir?
Yes. Can you just can you provide some guidance? That would be helpful.
In terms of exact number?
Yeah, or a ballpark range will also.
No, you see the 0.77% is a credit cost for the year, na? When my beginning net NPA was 0.9.
Okay.
No, my beginning net NPA is 0.43. So naturally it will come down, na?
Okay. Thank you. That's it from me.
Yeah. Thank you, Ketan. Next question will take from Rakesh Kumar. Rakesh, please unmute yourself.
Hi. Thanks, sir. So just firstly, sir, on the liquidity front, what we holding in the book. So we are continuously having investment deposit ratio on the NDTL close to around 29.5, 30% kind of a number. So what is our thought process on that? Would we be able to use some of the liquidity in the next financial year?
Well, right. You see, in the last year, you see in absolute terms also, you see our deposit has grown by, say, 67,000 crore rupees. And our credit has grown by 60,000. So around a incremental CD ratio of 90% in the 23-24. We are sitting at a CD ratio of 77-78%. Right? Now, going forward, we would like to plan in the similar way. As far as liquidity is concerned, we are having around a 44,000 crore of excess SLR as on date also. So what happens? Some of the money we will utilize for credit, since we will be getting more return under the credit. And one more point is that liquidity is available. Issue is that at what price you are taking. So we don't want to be outlier in the price and take money, and then it will impact our NII and also. You see, we will be able to maintain our margins, NII growth and everything. So we will be growing in a very planned way, but like to maintain our CASA 40% plus. So our average deposit cost will come down. At the same time, in a credit side also, we want to grow retail, agri, MSME, corporate in equal proportions or so. So better yield and better margin.
The HTM book that we have, would that all in the money, or there would be some loss in the HTM book at the current yield?
No, you see, I told you that my HTM yield is 7.06%. HTM is, we are not required to make provisions and all. 7.06 we are having.
No, I'm just thinking from the point of view that, to what extent we can liquidate, that SLR and use that into the CDR. So from that perspective, I was, trying to understand that, what is the position on the HTM book. So are we in the money or out of the money in the HTM book?
No. HTM, and we are having good AFS book as well. As per the new guideline also, we created good AFS book and HFT book. Even in the HFT or FVTPL, our holding yield is put together is basically a 8.61. So that good book HFT and AFS, so opportunities are there, and if the need arises, we'll always square it up and use it for credit.
And sir, LCR, currently the LCR would be, sir, March end, sir, LCR?
LCR is around 132, 133% or so.
Okay. And sir, this quarter we have a lower credit yield on a calculated basis on a quarterly average balances. So any specific reason for the lower credit yield this quarter?
No, but you see, our yield on advances have improved by 3 basis over the December quarter.
Okay.
What happens, sir? There are two play here. We are having 60% MCLR book and 34% is the repo. The repo, there is no change. Of course, we have increased our MCLR, and as a result, our yield has improved slightly. And that MCLR also, 1 year MCLR will come for repricing after 1 year.
And sir, have we reversed any excess provision on the loan sold to ARC close to around 80-85 crore this quarter?
Not because whatever money we have received cash, we have reversed up to that amount only. But the money which we received in the shape of SR or as OCD or NCD, as and when the money will come, will reverse.
Actually, it's I was going through the this thing, your notes to accounts. So here we have given in 18 that there is a total reversal of 232 crore and 149 crore was the reversal as on December end. So the residual amount we would have reversed this quarter.
No, this reversal is up to the extent of cash received, na?
Correct. Okay. So we have not credited the PNL this quarter to that extent?
No. Whatever money, SR, OCD and NCD we have received, it is basically as and when we'll receive money. You see, this SR is guaranteed by the government even in 5 years period also. By the time NARC will sell the asset and will give money. So this money will come every year to us, rather every quarter to us. Some money will come. And then we keep on reversing that part.
Thank you, Rakesh. We'll have to move on. Next question we'll take from Dikshit. Dikshit Doshi, please unmute yourself.
Yeah, can you hear me? Hello.
Yes, please.
Yeah, Dikshit,
Yeah,
we can't hear you.
yeah. Thanks for the opportunity. One question and one clarification. So, firstly, what kind of recovery target we have for next year, and how much is our return of pool as of today?
Two things, sir. Our return of pool is around 39,000 crore. So 39 plus 21, 22, 60,000 crore of NPA we are having virtually. Last time we said that 8,000 crore recovery and we end up with the 8,800. This time also we are planning between 7,000 to 8,000 crore of recovery.
Okay. And one question regarding the RBI guidelines on the project finance. So there was some section of the investors. There was some confusion that whether this 5% provision is from the day one, or if the DCCO extension will be availed, then only the 5% provision. Any clarity you have?
No, 5% provision is till the DCCO is achieved, right? Construction phase. And I'm telling you, suppose we have given a loan, say sanction of loan of 100. First year we can disburse 20 rupees, next year 30, 40, then next year remaining. So the provision will attract only on 20, not on 100, Baba. On the third year, it will, of course, attract a provision of 100. And the fourth year, it will come back.
Okay. Okay. That's it from my side. Thank you.
Yeah, thank you, Dikshit. Next question we'll take from Jai Mundra. Jai, please unmute yourself.
Yeah, hi, sir. Good evening. I have a couple of questions.
Yeah, good evening.
Sir, first is the corporate slippages are negative this quarter, right? So is it fair to understand that, there would be some slippages, but then you would have recovered slippages from the previous quarter, and hence this quarter slippages are negative? I mean, why the fresh slippages are negative number?
First time we are saying negative number, na?
Yes,
so this is the recovery, sir. You
okay,
see only one side only.
No, so I wanted to check, sir. So let's say there was some slippages, but you recovered during the same quarter.
Yes,
you recovered
because we are doing on quarter basis, na?
Okay, so this is the slippages number that we show is after inter-quarter recovery.
Year as a whole, naturally your slippage will be less. Huh?
Okay, understood. So that is one. And second, sir, if I see our recovery number, total cash recovery number, which is 2017 this quarter and 2,509 this quarter, previous quarter, that number has changed, sir. I mean, from previous, I think it was some lower number. It has been revised upward, the third quarter number. Any specific reason, or how does this work, sir? Because the previous number have also revised upwards. The third quarter.
Just a minute. I'll come back. I'll come back to you. Last quarter. Last quarter. Same number, I think we are not changed. Why should we change? You see last presentation.
Yeah, in the last presentation, this number is lower. The total cash recovery.
December, you are talking about the December 23 quarter?
Yes, sir.
Okay, let me see the presentation of December 23. No, it is 2509 only, sir.
Okay, so the copy
same number,
that
sir. 2265 is a September number, sir. 2509 correct, same number, sir.
Okay, so what I had is 2340, but anyway, so that is.
Your own calculation you might have done is 230, yeah. 2340 is just above.
Okay, so total recovery.
Pure cash recovery. You wrote just below that 2509, same number.
Right. Okay, understood. And so this quarter, could you give this?
Yeah. This correction. Just a minute. It was 2340. Second is 2509. Okay, understood. But number is 2509 is final.
Right. Okay. Understood. And sir, this quarter, out of 898 crores of cash recovery and upgrade, if you can bifurcate, what is the cash recovery and what is the upgrade?
So major part is basically what happens by the time you reach to the fourth quarter, na. So virtually your cash recovery is more.
Right.
So major part is basically cash recovery.
Okay, sir, a small question on personal loan, right? So we had started this business, and the portfolio is very small. Still, the quarter-on-quarter number has declined. The outstanding number has declined. So anything to read into, are you seeing any headwinds, or is there a change in the strategy in the personal loan business? Because from 8,600 crores, it has now fallen to 8,500 crores on a QOQ basis. It was growing at a rapid pace. So anything
Because what happens in a personal loan, you get recovery also very fast. Because the quality of customer which we are lending, basically, those are existing customers, salaried customer, CIBIL score more than 730 or 750. Majority are more than even 750 CIBIL score. So you get recovery also very fast. And period of loan is also very small.
Okay. And lastly, sir, this pension that you said, 388 crores that we have provided on ex gratia, this is the same thing, right? That we had provided last quarter, some 300 odd crores on the pension.
No. This is the first time we provided, because the settlement was signed only in the last quarter, not in December quarter.
Okay. So this is a new clause in the settlement. Is that the way?
Yeah, new clause that also we have fully provided.
Right. All right, sir. And if you have the loan mix by benchmark, sir, EBLR, MCLR, etc.
So I'm telling you, 60, close to 60% is basically MCLR, and around a 34%. 34 is basically repo. Rest is fixed.
Understood.
Or external benchmark, right. Very small, or base rate, earlier loan.
Right. And sir, if you had highlighted this thing that, out of this new investment norms, we are in the money, in the sense that there is some accretion to the reserves, AFS reserves and general reserve. If you can quantify, sir, how much is the addition to CET1 or Tier 1 basis the new investment norm as of April 1st?
No, that is basically what happens. You see, the interest rate 10 years GSEC on 1st April was, I think, 7.06 or so. Today it is around 7.16 or 17. So based on the movement of the GSEC prices, this reserve also plus and minus will happen, and it will directly happen in the reserve side.
Okay. Yes, sir. Thank you, sir. Thanks a lot.
Yeah. Thank you, Jay. Next question will take from Suraj Das. Suraj, please unmute yourself.
Yeah. Hi, sir. Thanks for the opportunity, and congratulations on a good set of numbers. A couple of questions. So you have done really well on the corporate book this quarter in terms of growth. And if I see within that, probably the segments which have done well is the other infra, construction, and commercial real estate, where more or less, on a sequential basis, the growth has been something like 5 to 6%. So just wanted to check, sir, in terms of the other infra, what are the segments where probably this growth has came from? Is it solar, or is it anything other? And what is the general yield that you are charging here?
The other infra, basically 3-4 major sector. There's a city gas. City gas is a new area where the constructions is going on, the pipelines and all. Smart metering is a other area where the new developments are taking. Data center is a new area where the developments are. Solar panel manufacturing and all. These are new areas. These are new and upcoming areas where we are giving loan, and the margins here are slightly better.
So in terms of blended interest rate here, it would be 11-12% or higher?
No. Sir, 11-12%, you will not get a good quality customer.
Okay.
You will not get a good quality customer.
Okay. So it will be
competition intensity is very much.
Okay. And then in terms of the construction and commercial real estate, here if you can also highlight your strategy and probably what is the blended interest rate here.
So what happens in commercial real estate also, there's huge opportunities. I'm telling you that the way the e-commerce is happening in the country, there are the data repository requirements and all have increased. Every day new data is created. So data center is a huge business opportunity for entrepreneur and for us to give LRD loan and all, right? In office space also we are giving, even malls and also are now again full. So there are opportunities there also. And in each city, the warehouses and all, there's a huge opportunity because now all these e-commerce companies are delivering goods in a one day, even in 6 hours, 10 hours. So there are, in each city there are warehouses. So huge opportunity is there in the LRDs. And the interest rate we are getting, because the cash flow is there, na? Cash flow is there and promoters are solid. So slightly better interest rate than the 1 year MCLR or near to 1 year MCLR.
Right. Understood, sir. And sir, I mean, barring LRD, what would be the general, moratorium period during the construction for all these, project loans?
No, what we are not giving. We are not in the business of giving construction and then LRD. We are giving when the tenant is in place, money is coming, so you are assured that your cash flow is there, then we are entering.
Okay. But for the other infra segment, I mean, generally there would be some, construction phase, right, for this solar or data center?
No, other infra, all are very, very good companies. All are AA, AAA rated companies. And they have taken various districts in India, right? Various districts. So they are performing companies, good debt equity. So there we are giving quality of credit is that way better. And rating is also better, even AA or near that.
Sure. Okay, understood. And sir, one last question in terms of on slide 29, more technical question in nature. If you can, clear us the difference between AUC recovery and the MOI recovery. I mean, what is the meaning of these two line items?
And what happens? MOI is an interest recovery, right? So interest recovery will go straight away to interest income. And other than MOI will go to a reduction in outstanding, or if it is a return of account, it will go straight to a income account.
Okay, so this 184 crore also goes to the interest income line item.
184 crore has gone to the interest.
Okay, understood, sir. Thanks so much, sir.
Yeah, thank you, Suraj. We'll take next question from Sushil ji. Sushil Chokshi, please unmute yourself.
Congratulations, Jain Sahab and management team of Indian Bank for excellent performance. Sir, in your tenure, if many more transformation have to happen or the transformation journey which you have started since you've joined, what are the things which you would like to see that has rolled out and where you see a maximum benefit for Indian Bank's future?
So thank you, Chokshi ji, first your compliments. And I request Bajaj ji to give that. I will give you what is the impact on the bank.
So no, in fact, when we go with these digital journeys, one side we are improving our asset quality. One side we are improving our asset quality. Other side the TAT is improved. So during the last financial year, we did almost 81,000 crore of business through this digital journey, and this year we are again planning to cross 1 lakh, more than 1 lakh crore, which is monthly more than 10,000 crore now run rate is there at present. So apart from that, one more the major the project which we have taken out, that is on the new mobile app, that is omni-channel, which we are going to start very shortly. It will be again a super app kind of thing, which is a similar experience on all channels of access, maybe a mobile app or internet banking. Even the journey started on one channel can be completed on other channel. So this will help us in reducing our operating costs and improving our asset quality. So these are the one or two journeys with the projects which we have taken almost on the completion stage. Apart from that, various other on the infrastructure we have done. Now I was telling in my presentation, we are coming up with the near dear site also. And on the infrastructure also, most of your fixed assets on that, maybe a laptop, desktop, the ATM, all those things we have changed during the last financial year, last 2 years. And a lot of changes have been brought in on the infrastructure at in the cyber SOC also, on the security front also. Almost 300 crores spent is there on the cyber SOC. And almost on the transformation itself, we are spending every year 500 to 600 crore. And going forward is going to be, we have committed more than 700 to 800 for the next 3 or 4 years, sir.
So, Choksiji, now I'll tell you that basically what is bank? Bank is basically a talent and a technology and a customer. On a talent side, how we are doing our business. First of all, the business itself, our large corporate branches takes care of about 76% of large corporate branch business. We are having 27 MCBs which we are added, and 5 or 7 more we are adding. So this MCB is a business 25 crore to 150 crore where we are getting good margins, and the growth here is around 23%. But the LCB and MCB, you need a good people who understand the credit, who can deliver. So what we have done, we have given the training in-house and outside to our people. First, we have recruited people in all cadre, whether it is a scale 1, 2, 3, 4, because not only our people, outside people also, we have recruited people from the market also to manage over this LCB and MCB business. Now, third point is that other businesses, MSME business or a retail business, there also the knowledge, soft skills are required. So what we have done, we have given around 30,000 people training in the last year. 30,000 people, and we are giving training all our branch head, all our MAPC head, all our RAPC head, right? And time to time we are having their meetings also, so they have a positivity, they have energy, they have understanding of the business. So that way, all these put engines are working. Likewise, even I'm telling you, our SHG is a good business for us. Even our SHG people are giving training to the other branch managers to have a SHG business in other part of the country where the government is supporting even recovery of that. Our gold loan branches are giving training to the other branch managers to have a gold loan business, because this business we are doing from number of decades. So, and for all kind of training, support, soft skill, leadership development, all kind of training we are giving, all kind of recruitment we are doing. We are even at the top level we are recruiting from the market. This is talent side. But then everybody is being trained based on their area of interest, right? And on that area of interest, they are giving posting also based on their area of interest. Likewise, in technology also, we are doing number of things. In a core side also, we have done. Even today, our core, the capacity utilization is close to 60%, and we have a feature where we can increase anytime. Only we have to servers are all in place, and we have to pay license fees, and then we increase this number. We have middleware we have started, digital, the omni-channel we started, digital lending we started, CSOC we started. In the network side also, we have done number of things. All our branches are having 5 kbps, SD-WAN, server centralization we have done, DMS we have, huge things we have done, and all is contributing to the growth of the bank, and it will continue to grow. And that 78 journeys which we have done, I'm telling you, having 80,000 crore of a business, Baba. And
paucity of time, I'll ask you a question added to this. Led by your transformation journey of digital banking and Indian Bank shared service, where do you see your cost to income and number of products which you will be able to sell to your customers over a period of next 1 or 2 years?
So you see, our cost to income ratio was 45%. It was a 44% last year, and the current year it is around 45%. Because of the huge employee cost, this time we have booked on account of this. So we would like to bring back this cost income ratio below 44 in the time to come, and that can happen only with your fee-based income and your better margins. So we are working on that, and you see we are able to maintain 42% CASA. And what happened, we have even the liability side also, we have done segmentation. We have RNGR sale at a various state capitals we opened. Even resource acquisition center we are planning to open around So far already opened around 75 centers. We want to slowly move to a 200 center where the money is. So wherever money is there, we are there.
So are you sensing large manufacturing business in Tamil Nadu and adjoining areas where Indian Bank has a large presence?
Yeah, Indian Bank, we are having around 25% of balance sheet from Tamil Nadu.
No. Are you sensing large manufacturing opportunities?
Yeah, opportunities are there. Now, large is also there, mid is also there.
Okay.
That is why my mid corporate business has grown 23%.
Sir, I'll take further.
Come again, please.
Sir, I said because of paucity of time, I'll take further questions offline with you.
Okay, no problem, sir. No problem at all.
Thank you.
And we started our subsidiary as well, right?
Yeah, thank you, Sushilji. Yeah, thank you all the participants. Thank you, MD sir, for allowing us to host this call. So do you have any closing remarks to make? And in case basically you have any data on the project financing stuff, which one of the participants has asked, you can share the same.
The project financing data we have to see, actually, this is account by account we have to see. So it will take time and then we offline, I will tell you. But at the same time,
Anand, can I come in just for?
Yes, Ajmeraji, no problem.
Sorry, Ajmeraji, we have to close the call. Sorry for that.
Ajmeraji, I can discuss with you, no problem, sir.
Oh, okay, all right, sir.
Sure, sir.
Thank you all analysts and investors for continuous interest in the bank and also guiding us. This all will go a long way for improvement in our business. Thank you.
Thank you, sir. Thank you all participants. With that, we will end the call. Thank you guys. Have a great evening.